Hong Kong was a dream since I've been graduated 10 years ago.
With the building blocks of technology.
It's exactly the backbone. 15 to 25% valuation discount if they fall short on jurisdictions. This tariff war, it's just the beginning.
I really like the way you said it is new oil and gas.
At GaiaMine, we say that minds matter.
Hello and welcome to the Ethical Investor Podcast. My name is Amir and I'm really excited to have with me today Bedis Mzali. Bedis is relatively new in Hong Kong, arrived just a few months ago, and today we are very honored to have him here with us to learn about the mining industry from the ethical landscape. Welcome Bedis and thank you for joining us.
Hello and hello to your audience. Thank you, Amir, for your platform, your podcast, and the way you want to incentivize people on the question of ethical investment. I would be very pleased today to speak about critical minerals and the way we can finance them ethically. So I'm very excited.
Thank you, Bedis. And we know that you recently moved to Hong Kong. So just to kick off the proceeding, what brings you to Hong Kong?
Hong Kong was a dream since I've been graduated 10 years ago. I had the opportunity in the beginning of the year to join a startup incubated in Cyberport. It's called GaiaMine, and it combined different competences I wanted to develop and to expand as businesses. It's in between finance, metals, and blockchain. It was the perfect knowledge at the perfect city. We've been incubated in Cyberport for now months, and I joined the adventure as a business analyst, and I'm also working for CUHK as a researcher.
Great. We are very excited to have you here in Hong Kong, and Hong Kong has a lot to offer when it comes to capital raising, finance, synergy between finance and mining. So I'm really excited to have you here. And just to understand a little bit more, what brought you to mining industry?
So basically, after being graduated from Paris Dauphine University, I did some finance job, and then I moved to consulting. The last experience I did was in between Turkey, Argentina, Canada, and US. So my last experience brought me into mines, literally brought me into mines, on the ground. Brought me to the summit of Argentina, to Turkey, to Canada, to America. So I've been working as a consultant for a big mining group, and literally it was a new subject, a new topic, a more applied finance. So not a structuring position, not a quant position, not a trading position, but literally being in contact with the raw materials, with the seeds, with the.
With the building blocks of technology.
It's exactly the backbone of our iPhones, of our laptop, of this mic that I'm holding with my right hand. All of this, I saw the process. It was a pure industrial experience that oriented me to seek a position into finance and commodities, especially metals.
I see. That is very interesting. So basically, you're working with the raw materials of the technology that we use every day. But I guess in Hong Kong, we don't have any mines here, so you must be working to, finance or provide a one-stop shop for financing of these minerals. And you mentioned that financing for these minerals is really hard. So I'm curious to know what makes it really hard. What makes it challenging to finance critical minerals or mining of critical minerals?
So, Amir, the global energy transition is accelerating. It's not anymore just about crafting iPhones or providing rare earth, to your medical services when you're doing an X-ray. It's about decarbonizing the whole industry, but it's hitting a wall. We can observe a critical shortage of metals like copper, nickel, lithium, and cobalt. Mines are essential to closing this gap, but sustainable mining projects still struggle to attract capital.
Why is that?
Why? Because traditional financing is outdated, opaque, and often incompatible with sustainability standards. At GaiaMine, we believe one thing above all: mines matter. And our mission is to make sustainable mining accessible by bridging investment, sustainability compliance, and the future of energy through a powered blockchain platform. But to answer you clearly, mining companies face serious hurdles. 15 to 25% valuation discount if they fall short on jurisdictions. 60% of institutional capital is off limits in high ESG jurisdictions and compliance. Investors' interest disappears during down cycles, making funding unreliable. For example, if you look today to the price of silver, you'll see that it's following industrial cycles. But on the other hand, the parity gold-silver, the ratio gold-silver, had never been that to this point of prices. On the other hand, investors face equally difficult challenges, not just industrial cycles. Let me give you some figures. 30 to 50% downside risk on early stage projects, delays of 1 to 3 years, and capex overruns of 20% to 30%. Then the lack of deal access, transparency, and clarity. All of these issues create a market that is either inefficient or underserved. So in the end, there's a big monopoly of big bulge brackets that are hogging the market on big deals. And small or retail investors, small family offices, are not able to reach small mining projects. Not because of conspiracy theory, but because of all the figures that I've just mentioned.
I see. So it seems like there are a lot of constraints for investors to access the market, especially the retail investors. And a lot of our listeners are retail investors, which is why we will touch upon the ways retail investors can invest in the mining industry. But I want to understand more about, the ethicality side. Given we are the Ethical Investor Podcast and we mainly focus on providing insights to our retail investors, which focuses on ethicality. So please tell us more about the ethical aspects of mining and mining industry.
Thank you for this question, Amir. It's good to not play with the words, so we have to define proper terms. And ethical mining refers to extracting minerals in a manner that minimizes environmental harm, respects social rights, and follows strong governance standards. It is increasingly significant for investors because the clean energy transition depends on minerals like lithium, copper, and cobalt. Others like vanadium, titan, and nickel, but most it relies on lithium, copper, and cobalt. So yet, mining these responsibly is the only way to satisfy ESG-minded capital. At GaiaMine, we prefer to speak about sustainability because we look to the long term and not just these ratings or scorings that can change from a jurisdiction to a jurisdiction, from a country to a country, from an institution to another institution. But still, this is vital to securing a social license to operate, which industry experts deem fundamental. If a mining company fails to ensure safety and sustainability, it risks losing community consent and even its business in the end. So I would say to your audience, to your ethical investors, that these views of ethical practices are a proxy for a lower long-term risk. A mining firm that is held accountable to high standards is less likely to face costly shutdowns or scandals.
Yes, absolutely. I completely agree. Ethicality, sustainability, these factors are really important, especially for the investors. And companies have to comply with these to be able to sustain themselves indefinitely. And with proper industry standards and protocols in place developed by different industry organizations, it ensures that, whatever is presented to the investors, it is actually true in reality. But at the same time, we do see that there is a lot of greenwashing that happens through different means. So is there a lot of greenwashing happening in the mining industry as well? And which organizations can we trust in terms of rating and objective overview of different companies?
Well, Amir, your question is very sensitive because there is greenwashing, there will be greenwashing, and the fact that institutions that rate sustainability are fragmented makes our work difficult but not an unsolved problem. Some organizations are a source of truth. I can give you some names like EITI and the ICMM. But keep in mind that small mining projects cannot afford to do an external auditing of their environmental management or community relation. So it's basically the challenge for ethical investors is to find platforms that are already incorporating these levels of confidence, potentially lower cost of capital, and better access to capital markets, green capital markets.
Okay, so the platform that we can trust is EITI and ICMM. So any research conducted by these two organizations, EITI, ICMM, that is something that is trustworthy for the mining industry.
Exactly. Yeah, totally. They are not sugarcoating the countries or the companies. If they have something to say, they say it. Their reports are highly valuable. It doesn't mean that the big auditors are not valuable. They are still a good source of truth when it comes to quantifying. But it's always the trade-off between quantity and quality. Some informations can be done by, let's say, the Big Four, and some others by independent consortiums. So it's always a trade-off. We are entering an age of massive critical material supply deficits. So by 2030, demand for critical energy transition metals will rise over 300%, and by 2040, it will rise over 400%. But the supply is far behind, so forecast shows deficits of 40 to 60% for graphite, 42% for cobalt, 35% for lithium, and 15% for copper. Meeting global demand will require over 600 billion in new investment by probably 2050. And yet, ESG compliant projects aren't getting funded fast enough. This is where Gaia steps in, especially the underserved project space. With a 1.2 trillion market for the, let's say, 2020s and 500 billion in energy metal, we target 103 billion serviceable market. That's ripe for innovation. Our vision is global. Most of platforms are either generalist or only partially focused. At GaiaMine, we believe that we are the only one-stop shops that combines research, investor engagement, and sustainability alignment, all tailored for the mining sector. It automates capital fundraising, reduces costs by over 80%, and enables true peer-to-peer funding. So it's faster, cheaper, and more inclusive than traditional tools.
Thank you, Bedis, for all the information. As an ethical investor podcast, ethicality is one of the main factors that we consider when making any investments. But obviously, fundamental analysis, the macroeconomic analysis are also important. So when it comes to different mining companies, what are the factors that one should consider when making a decision whether to invest in a company or not to invest in a company?
You reach a good point because it's a dual problem. You can invest in a big company that is following a green and strong and robust engagement and targets performance that are associated with these big companies. On the other hand, you can also do big shots on small companies, but you measure their impact in the end. Let me give you a pure example for your audience. Let's put and play skin in the game. You have a big companies such as BHP that are following the scopes of decarbonization. Actually, they're the champion. They already achieved more than half of the path when it comes to scope 1, scope 2, scope 3, energy management, waste management, carbon footprint. They are not the big shot, for traders, but still you can envision margin and profit. And on the other side of the equation, you have small companies that have a terrible carbon footprint, but still are reaching benevolent and sustainable goals. So on the one hand, you have BHP, and on the other hand, you have, for example, La Française de l'Énergie, which is a company based in the east part of France, in Moselle. Their carbon footprint is terrible. Their ESG rating is terrible on the one hand. But still, it's a small cap that aims ethical goals. So to extract and electrify a whole region with hydrogen, and not gray hydrogen, but green and white hydrogen. So it depends. It depends which standards you look. Are you looking on regulation? Are you looking on specific institutions' assessments? Or are you looking on the goal? The green flags, when it comes to a mining company or any extractive industry, the green flags for me are the scopes. Scope 1, scope 2, scope 3. The rest is much more niche and not very relevant, and people have to go through the reports. In French we say, le diable se cache dans les détails, which means the devil is hiding in the details. Keep in mind that when a company achieves Scope 1, Scope 2, and Scope 3, it's a green flag. When a company is insisting on how benevolent they are with the community, it's not necessarily a green flag. It could be the opposite. Because, it's very difficult to measure social metrics that include workplace, safety records, community relations, and of course, indigenous rights. Government factors involve transparency and anti-corruption measures. So the biggest, I would say, red flag is when a regional or a local, or even worse, the government of, an emerging country say no, enough is enough. I'm not going to give a name, but here in APAC, there is a famous rare earth mining company that is somewhere in between Malaysia, Australia, and Indonesia. They've been topped by local and regional government, and then the global government on their practices through, the indigenous communities and how their social responsibility were engaged badly with them. Generally speaking, there are not those who are going to say we did bad things. The third party at a social lens are not the big auditing companies or the institution or, maybe EITI, of course, and ICMM, but in the end, when the government puts its nose on extractive industry, it means that it's so corrupted or so waste or so deprecating the human capital that it's the biggest red flag, and you should not, as ethical investor, put any penny on these companies. Of course, your audience is interested in ethical investments, so I'm not going to advise you to invest in antimony mines or tungsten mines, which are basically the raw materials to construct weapons. But in the end, it's a philosophical and economical questions. Where are you putting your portfolio? On which part of the spectrum? If you want to have indirect investments, I would advise your audience to focus on funds or ETFs. As a former professional in finance, I would advise you to look for ETFs when it comes to metals, while considering funds when it comes to sustainability. Capital markets have begun mobilizing around the critical mineral booms with a surge of thematic funds and ESG-focused investment vehicles. In the past few years, sustainable investment funds worldwide swelled to roughly 3 trillion in assets, and total ESG assets are on track to reach 40 trillion by 2040, providing a huge pool of capital. Asset management and asset managers are launching specialty products to channel this capital. For example, in 2021, Van Eck introduced Green Metals ETF, which ticker is GMET, that invests only in companies deriving at least half their revenue from green metals, like again copper, lithium, or rare earth. Such ETFs give investors exposure to miners and refiners to meet certain sustainability criteria. ETFs would fit more metals goals, and funds would fit more sustainability long-term profit baskets and buckets.
Wow, that really is a comprehensive overview of different factors one should consider when making an investment in the mining industry or any of the mining companies. And you mentioned that investors can invest in ETFs and funds that are available on the market. But what if they want to invest in a specific country? Are there any places or, like exchanges where they can go to and, look for individual companies or mining projects to invest in?
Well, there is not yet a one-stop shop for mining company. At GaiaMine, it's our objective. There is no universal grid screening the market of extractive industries. This is an ambition that we as GaiaMine ambition on the long term. But this is very difficult because, as you mentioned, many companies are not listed. And this is very funny what you say, because yesterday I was trying to quantify how much is the volume when it comes to non-listed mining companies, how much they represent in volume of USD. And it was a very difficult calculus because we don't know. And again, this is an ambition on the terminal, the Gaia terminal, to give visibility and to give access to premium research, at least to screen the market. Nobody knows which is, the very, very pioneer, very local sapphire or diamond indigenous company in Madagascar. Even their name is not vetted. So it's an ambition. It's an ambition for us. And to answer your question, there's no universal grid when it comes to extractive company. But when it comes to listed companies, I'm going to give you the two sources of truth for metal. As metal places and as raw materials places, you have basically the London Metal Exchange, which is not the London Stock Exchange, the LME, which is very niche but also massive. Most of the metals are priced there through the major metal traders who possess a seat there. And for the metal not listed on the London Metal Exchange, you still have the Chicago Exchange, but this is very, very niche. If I want to transmit something to your audience, Emir, I would say that commodities are not relying on the same volatilities and the same dynamic and the same prices and the same costs and the same values as stocks, as other instruments that can be traded. Commodities, as you can understand, they face different risks. Some risks are similar, but if they're very niche, it's also because of their own structure. If you want to trade an Apple stock or Microsoft, you will not face the same volatility issues that the organic supply problems that you face on lithium companies, and that in the end fix the price of lithium.
Thank you, Bedis. Talking about the volatility, there is right now one major factor that is creating a lot of volatility in the markets, and that is tariffs. And given that critical minerals are very critical to all these different countries which are producing them, and for different kinds of technologies that we are using right now, what impact do you expect tariffs to have on the mining industry and mining of critical minerals?
Amir, it's a very interesting podcast because I think we cover all of the sensitive dimensions on the metal. This tariff war, it's just the beginning, and it's going to add a layer of volatility. We see resource nationalism and export controls on the rise. Major producing countries are increasingly using their mineral wealth as a geopolitical tool. Dozens of exports restrictions have been enacted in 2024 alone, and over 30 policy measures worldwide restricted mineral exports. Indonesia, for example, has banned raw nickel ore exports to build up its own refining industry, and China recently imposed export license requirement on certain rare earth magnet materials. These rare earth magnets are not just for building Tesla or BYD. It's also to power a fleet and vessels that are not used for civilian purpose. According to the IEA, more than 75% of global lithium production is now subject to some form of trade or investment control by producing countries. This new reality is sometimes dubbed a global scramble for critical minerals. We are not in an all-out resource war, but clearly minerals are becoming a facet of geostrategical competition. It's the new oil and gas, and we can imagine, not necessarily for the good of human being, that an OPEC of metals can sprout out tomorrow. I see 4 different blocks. Of course, the West, the East, China, Russia, and Iran. But also some countries are trying to play both, the East and the West. Countries like India, Turkey, Israel, Hungary. And some countries like Indonesia that is trying to be an unaligned superpower or regional superpower, playing nickel as a weapon. It's not the premium quality of nickel. It's not Russian nickel, but still, it's the nickel that is hogging the market. Indonesia alone is more powerful than the 9 other producers of nickel when it comes to volume. When it comes to value, it's something different. But it's a significant shift that we need to keep in mind. And all of this underscores that financing critical minerals is not just an economic issue, but a strategic one. Nations are pulling policy levers to secure supply. And those levers, in turn, shape the investment landscape for companies and investors. If you ask me what can you do as an ethical investor, I would advise you to go through niche platform or family offices or small asset manager, because in the end, big bulge brackets are having monopolies. Some blocks, the West is going to specialize, I don't know, I'm going to say germanium. And the East is going to specialize on rare earth. But it's too early to say this and that, because last week, the only rare earth mine in California that is exploited by MP Materials had double the stock on the market. So basically it went from $30-ish to $60-ish. So I'm not advising you to invest in MP Materials, but I'm advising your audience to be keen on, let's say, a finite set of materials and trigger companies that you think that are satisfying the scopes, or that in the end their output would benefit a green market. You cannot have both, but you can still have profit when you look to the beginning of the spectrum or the end of the spectrum. So we all have our objectives. Nobody is an angel, but you have, as an ethical investor, to be true to yourself on which ray of the spectrum I want to be a part of the investment.
I really like the way you said it is new oil and gas. And to be honest, I can echo that in the news that we read every day. How critical minerals are so important right now. As we mentioned before, they are being used for different kinds of industries, and one of the industries is also defense industry, which actually uses critical minerals for the production of different weapons. And then you have AI and blockchain and these disruptive technologies that are coming in, which again require the use of critical minerals in the production. And I'm so sorry for asking you so many questions, but there are so many topics to cover, and this one is also really important. Just want to understand how AI would be pivotal for the industry, and what impact do you expect AI to have on the mining industry as well?
AI, a niche topic, and on the same time, everyday topic. But in the end, why do we use DeepSeek? We use DeepSeek basically to tell us which recipe we are going to adopt for the dinner tonight. The question is bigger than this. Actually, if we look to the picture, I think it's my deep conviction that disruptive technologies such as AI, but also blockchain, can improve long-term profits and can improve green impacts. So in the end, can improve ethical mining and financing ethical mining. Let me give you examples that are not that much known for mainstream public, but still it tells you everything. There's a startup that is called Cobalt Metals, which valuation is estimated at over 1 billion, and it is positioning as a leader in AI-driven mineral exploration. It begins in 2019 with a seed round at 15 million, and then in 2021 they raised 50 million in Series A with investors again like BHP, Standard Industries. In the end, literally Jeff Bezos and Bill Gates were backing from their own portfolio, from their own money, these cobalt metals. So they're understanding how it works. Rare earths are not called rare because they're scarce. They're actually rare earth. You can find them in Brittany, in the western part of France. You can find them in Indonesia. You can find them in Greece. You can find them everywhere. They are called rare because it's not all of the veins that have the same concentrations. And for standard reasons and for green reasons, we accept for decades that China was the mainstream partner when it comes to rare earth. But now that we realize that resources are limited, that we're in a tariff war, in a commercial war, the war is economic, and these are leverage for the different superpowers, we try to mine this on our side, but with the least impact on the environment. Because rare earth mining is the most poisonous for the earth, and we accept, again, for standard reasons, because of greenwashing, because of blind regulators, that, okay, it's okay, China is dealing with it. And these cobalt metals associated with mines in Zambia and mines in Greenland that are fully backing the American industry. But they are doing AI-driven mineral discovery, AI-powered mineral prospecting to find the veins that are the most concentrate when it comes to metals. It's a study that we did at GaiaMine. AI mining or AI-driven mining market can be projected to reach 35 billion by the end of this decade.
Thank you, Bedis. Really appreciate all the insights that you have provided today. And just to wrap things up here, what factors do you think would be the disruptive factors or value-creating factors for the industry in the coming decade? If you could just give me, 1 to 2 factors, that would be awesome.
So, to give you some factors that are crucial, let me first begin with the fact that mining is not the automotive industry. Basically, if you're losing 6 months on the supply chain or on the innovation on the automotive industry, you're dead. Mining industry is a bit different because it has been the same extractive industry since the Pharaoh times. It's not rocket science. You have a hole and you have to dig into the hole to extract the ore and then just crush the rocks and extract this gold. During the gold rush in the west of the Americas, the people who had become rich were not the miners. It's those who were selling shovel and picks and chemicals. Those who were selling the instruments. It's not the full miner who came from his Nebraska or who came from even the old Europe dreaming about gold and the ecstasy of gold. This is a soundtrack from Ennio Morricone, which is very true actually. The hit and the focus, I think, will be on the electric vehicles that are used on the ground. And I think that the main focus is on the suppliers, those who are providing the instruments, prospections, the trucks, etc., etc. We see them adopting more and more electrified and less consuming, when it comes to carbon footprint and when it comes to electrifying the mines. I can speak about ABB, I can speak about Sandvik, but I can also speak about, those who are giving the pure raw materials of chemistry, to process and to crush the rocks. Air Liquide, for example. I would say the technology is not the biggest factor on mining. Of course, I would be thrilled and eager to see my projection on AI being confirmed. And I would be more than thrilled that our blockchain solution through Spidermine to have our signature on the mining industry. But technology is an overlayer. I would say when it comes to critical minerals, you should adopt a balanced and informed approach. So do rigorous due diligence, especially on jurisdictional factors, rather than avoiding the sector outright. Then leverage sustainability as a lens for opportunity, not a risk. Accept cyclical volatility. Definitely. Accept the fact that silver is not gold, gold is not platinum, platinum is not osmium, osmium is not titan, and titan is not antimony. Of course, gold is gold, and silver is the little brother of the gold, but even silver obey to this cyclicality, and that may be to their advantage by investing when prices and this project valuation are temporarily down with a view on long-term fundamentals. It's also wise to diversify across minerals and geographies. You cannot put all of your eggs on one country. Look to 2 countries per minerals. And finally, align investment with policy trends. Investors could focus on regions where policy support is strong. For example, projects in Europe might benefit from government grants or fast permitting, as well as allies resource-rich countries where partnerships are in place. Europe in particular, with its critical raw material acts, is incentivizing local projects, and investors see it as an ESG compliant or sustainability compliant with growing government backing. So let me give you 8 values that can maybe pique the interest of your audience and that are fitting sustainability and profitable goals. ABB, Sandvik, those 2 are Swedes. Generally speaking, the big suppliers of mining groups are from Northern European countries. I can also add Metso Autotech. There's also Atlas Copco. Being ethical doesn't mean don't take risky position. I would give you 80 Mile PLC, which is the riskier value you can have in your portfolio, but that in the end will provide ilmenite and rare earth to the US. It's a Greenlandic mine that used to work as a joint venture with Cobalt Metals. And probably for the others, take mines that had achieved the scopes. So BHP, Rio Tinto. Now we have consistent and robust portfolio on a long-term period. I think this portfolio is providing you equivalent than a monitored with a private banker assisting you on your dollars and your investments. In sum, know where you want to put your money on the spectrum and diversify these rays. And you'll see the opportunity. You'll see the responsibility. You'll see the growth. And finally, guys, please contribute to the energy transition in a meaningful and principled way. At GaiaMine, we say that minds matter.
Bedis, I was hoping you would mention that you will have the robotics working in the mining industry to replace human, but seems like that is still not the case. But once again, Bedis, thank you so much, for all the insights that you have provided us. I think for all of us, it was a new topic, and the way you have covered the deep insights about, what is critical mining, factors we should look out for, the organizations that are, trustworthy in terms of regulation and objective overview of the companies, places to invest our funds into, and of course, tariffs, AI, all these different aspects of mining industry. Really appreciate your insights on these topics. So really thank you so much for your time and joining us for this episode.
Thank you, Amir, and I hope that with my expertise and with GaiaMine, you guys are going to change your perspective on the mining industry and on the extractive industry, because ambitioning to be a one-stop shop is something, but incentivizing people on industries that are that traditional is something else. So thank you again, Amir, for your time and for inviting me. Thank you very much.
It is my pleasure, Bedis. Thank you once again. And thank you to all of you who have been listening till this point. If you would like to know more about the GaiaMines, you can visit their website at GaiaMines.com, or they also have a LinkedIn page which you can follow, and you will get more information about the different mining projects. And make sure to also follow our LinkedIn channel as well, the Ethical Investor Podcast, for more amazing contents like these. And with that, thank you for listening. Goodbye, and see you next time.